Good afternoon, everyone, and welcome to the last but not the least panel of the day. So thank you for staying with us. I'm excited to host a panel with these four gentlemen who are going to allow us to get into, from the theory to the reality, of what's really happening with cross-border payments and digitization. So we're really fortunate to have these gentlemen to share what's happening in the real world, shall we say. So let me start by asking, maybe we'll start at the end, and I'll ask each of my panelists for a very brief introduction, and then we'll go from there. Leonard?
Hi, everyone. My name is Leonard. I'm the Asia Pacific President for Bitstamp by Robinhood. For those of you who don't know, Bitstamp is a centralized digital assets exchange. We operate as a licensed exchange in some of the major financial centers globally. Closer to home in Asia, we're operating out of Singapore under an MAS license. As an exchange, we facilitate spot markets for crypto and also for perpetual futures. We've been doing so as the longest running exchange, having been established since 2011. In more recent times, as of last year, we came together with Robinhood. And really what this is seen is the combination of a very large securities broker with Bitstamp's crypto-native ecosystem and technology. Thank you for the organizers for having us on stage.
Great. Thank you, Leonard. Akhil, please.
Thank you. Hello, everyone. Akhil Dombrari, JP Morgan, I run the fintech sector for JP Morgan, Asia Pac. Two components, JP Morgan payments platform, focusing on the cross-border aspect of it, the engine room that processes 12 trillion a day, and the second part is what we do in the world of fintech. We work with the payment companies across the board, so talk about the remittance companies, MSPs, processors, and now the world of digital assets, and that's where I fit in. Pleased to be here. Thank you.
Thank you. Brian.
My name is Brian Mailer. I'm the CEO of Stable. For those that don't know, we are a layer one blockchain focused on payments. We saw there was a problem in the market, and we took the action to fix it. With that, we abstracted out a lot of the complications that come with using blockchain to make it more native and more friendly to a larger user base. With that, we removed a volatile gas token. We make sure we have sub-second finality that's deterministic. And also, we make fees predictable. Things like that include having peer-to-peer transfers are free, and that's at the protocol level. So we're able to make sure that we're bringing that cross-border payments on-chain in a manner which it can be replicated and can scale with the consumer demand. Again, thank you for the organizers for having us, and looking forward to this chat.
So, Richard, I think people have heard of your firm. I think they've heard JP Morgan, et cetera, but no, please share. Thank you.
Hi, everyone. I'm Richard Ting. 大家好. I'm co-CEO of Binance. For those that do not know Binance, we are the largest crypto exchange and ecosystem globally with 310 million customers, and we did 34 trillion in trading volume last year. So we provide the deepest liquidity for global exchanges and within the crypto ecosystem. And now moving beyond that.
Thank you for that. Let's jump in. Pardon my needing my reading glasses. So our panel topic perfectly captures two interconnected megatrends in 2026. Stablecoins and blockchain rails revolutionizing cross-border payments, which are still a tiny fraction of global volume, but with explosive growth potential and massive TAM, which these gentlemen certainly know, and remittances and trade and B2B. And of course, real-world asset tokenization, moving from pilots to institutional scale, tokenized treasuries, deposits, private credit, enabling 24/7 liquidity, fractional ownership, programmable finance, et cetera. Things that have been obviously big topics of today and will continue to be in the next few days. So, general question to each of you is, from your front row seat, what's actually working well today? And conversely, what are the biggest hurdles, i.e. interoperability, compliance, liquidity, or something else? So Leonard, would you like to start?
I'm still getting over Binance's volume numbers. So, no. In all honesty, ourselves, like Binance, we are an exchange where we're an infrastructure provider. So we see and facilitate a lot of these flows, whether it be remittance flows on chain, trading flows on chain. What we are observing, and this is not in recent time, but for a number of years now, the trading and payment counterparties that we're dealing with are taking a stablecoin first approach. And this means when they're dealing with a Bitstamp, an exchange, they're looking at how they pre-fund, how they settle, how they collateralize for credit. It is stablecoin first because there's a fundamental comfort, and this is across TradFi and crypto native firms. There's a comfort in the technology and a drive to make capital markets more efficient with this technology. I wouldn't say what's not working so well. I would say that this is growing pains that the industry is going through. It's still very much a startup ecosystem, meaning that there's private enterprise issuing more dollar stable coins, more layer ones, regulators creating their own regulatory regimes. Some of this is happening in isolation. So as an exchange, we see there is an oversupply relative to the size of the current market, but also a high degree of fragmentation. And as an exchange, our users want us to solve the interoperability challenge, right? They want us to deliver seamless movement of assets or swapping of assets, moving across chain, moving money across borders when regulatory regimes don't support that. So for our challenge is how do we meet this challenge? It's a very large tech, regulatory, capital exercise for us to do that. But it's really just, as I said, growing pains.
Yeah, happy to go next. Thanks, Kevin. So good explanation, and I think it's. I just wanted to bring in a separate flavor around it, and something we see compliance as specifically cross-border payments and integration with the world of digital assets to digital currencies. And so I always like to talk about, especially when speaking to someone the other side of the world, people don't realize how big Asia-Pac as a region is. From 4.8 billion people, give or take, 60% of the world's population. But if you think about the fintech adoption in the region, we're over 90% in terms of consumers adopted either one or more fintech platform or accepted or operating, which is huge. And if you compare it with the other region, I think Asia's leapfrogged in terms of where the opportunity is. The pain right now is the cross-border payments. Now, how do we solve that? And potential opportunity here is around how could digital currency, the digital assets, as an alternative payment rail come into the picture to solve the problem? I think that's where the opportunity lies. But the questions and the challenges, as Leonard, you said, interoperability is actually a challenge which is a growing pain. I think it will solve itself over time. And I think how that's going to solve, it's going to be the collaboration between the industry, the clearinghouses, the regulators, the banks, the payment companies, the digital assets players. I think all of us as a group is something that we can solve. And the follow-on component, I started off with compliance because that's where the challenge lies, because the overall ecosystem has to evolve with it so that there is consumer confidence that can grow and help the ecosystem grow. So I think, Leonard, I think you've well said around the growing pains. I think that's where it's going to grow. But the compliance part is going to be the critical component that we'll need to solve for and think about.
Sure. To build on what has already been said, but not to be redundant, I would say, talking about what is working, I would say the boring part is working. The technology functions. It delivers what is expected, and it is able to make a performance that is exceeding what's currently available on the market with traditional rails. And with that, you're able to actually start making an impact or start making a change in terms of how people are going to be able to transact across borders. One of the things that I bet Richard and Leonard are both keenly aware of is the fees when it costs to deal with traditional rails. And so while people are able to play in the crypto ecosphere and have low fees, high transaction times, low transaction times and high throughput, when everything kind of falls apart, when it starts exiting that market, going back to traditional banking accounts or going to other banking rails, is you're now hit with what would be a $200 transaction would have about a 6.5% fee, but on the crypto side, you can do that with a 1% fee. So that real market is actually taking value, and I would say that being able to have that lower fee is what is working because the technology is functioning, and that's the proof of the concept. What isn't working, I think, a little bit is really focused on the fragmentation in terms of the compliance. Like while there's the US has theirs, EU, Japan, the UAE, and Hong Kong doing the standard ordinance, is the problem there is that you need to make sure that fundamentals are baked into the infrastructure of the chain. So if you have allow list or block list or travel rules already designated on chain, you're allowed to have that real interoperability when customers or users are moving between different chains. So from an exchange perspective, they are not focused on which chain's being used, but they want to make sure that those chains are compliant. So from a layer one seat where I sit, we're very focused on that, making sure that users are able to act on a global scale rather than being segmented into a certain jurisdiction. We want to make sure that the reach is broad and wide. So while it's not working today because of the fragmentation, we think that building it on-chain at the core solves that problem for the larger scale ahead.
So I look at it from a different dimension, right? So I've been involved in financial services for close to 32 years now, this year. And if you look at the infrastructure layer that we have built on, which is the current state of play, is extremely archaic by today's standard, right? So if you rethink financial services, you'll not be based on things like Swift network, correspondent banking. When you do a bank transfer, the recipient will only receive the funds 2 to 3 days later. At very high value extraction by the financial institutions, you mentioned 6.5% fees, right, for cross-border remittance. A lot of times, if you look at low amount denomination transfer, it's much higher than that. If you look at the World Bank study, it can go up to 11%, right? So you do want to look at what sort of options are there out there, and stablecoins represent that. It's totally built on blockchain. If you do a transfer on stablecoin, it's instantaneous at a fraction of the cost. You mentioned 1%. Actually, it's not 1%. It's much less than that. At a fraction of the fees. So the value get retained by the user instead of by the financial institutions, right? So there are a few challenges. I think one of the key challenge is regulatory clarity and certainty, which is coming through now. So if you look at last year, with the promulgation of the Genius Act in the United States, the amount of stablecoin volume transaction from the beginning of last year to this year went up by more than 70%. Right? So if you look at transaction volumes of stablecoin, it has surpassed that of Visa's transaction volume. If you look at market capitalization of stablecoin, it has risen by more than 50% year on year. So the traction is very strong. What it needs is really regulatory clarity in different parts of the world. So once the US start to embark on that, the rest of the jurisdiction will have to sit up and take notice to say we can't fall that much behind in terms of the competitive landscape and value chain. So you see the likes of Hong Kong coming out and issuing stablecoin licenses last week. So congratulations on all the good work in Hong Kong. But many other countries will also sit up and take notice on that front. The other pain point is the user interface pain point, right? So if you look at it, today globally, about 600 million people has exposure to crypto in some forms, but only about 30 to 40 million are active on-chain because the user interface is not like a Web 2 user interface, right? So most of the people who are not crypto native or not digital native wouldn't want to be bothered with, which chain can I transfer on. They want to be chain agnostic, right? So if you look at the best Web 2 products, once a user start using, the drop-off rate is very low, right? So 5 to 10%. But any person that touches the Web3 space the drop-off rate is pretty high, 65% drop-off after the first experience, because it can be daunting. So how do we create a much better user interface for users? I think that's one of the key challenges that we have to solve together. But the key advantages and benefits are so obvious that you see corporate treasuries around the world that in the past moved millions and billions of dollars around the world, but they have to hold a lot of capital, because if you transfer from Australia to Europe, it takes 2 to 3 days. You don't have certainty of when the vendor will be paid or when your subsidiaries can receive the funds. If you move it to stablecoin and the likes, and JP Morgan is experimenting with things like tokenized deposits, you have that certainty at a fraction of the cost. So in terms of capital velocity and efficiency, it's so much more compared to the past. So these are the trends that we are seeing, and we are still very early in the game, so we are going to see a very strong growth trajectory going forward.
You remind me that we've been saying in this ecosystem, I've been working in it for 9 years, we're still waiting for our Netscape moment. And the user experience is, I know it's coming, but it's been coming for 9 years, and so hopefully for the reasons you mentioned, you remind me of that. And the last number I saw in terms of issuance of stable coins, at least US dollar backed, I think it was about 315 billion. And so, to your point, it feels like we're still just scratching the surface, and all of you gentlemen are going to be playing a bigger role from your perspectives and your positions. So, let's shift to my second general question, which is about what you all represent individually and collectively, which is what I call the TradFi crypto convergence. So we're seeing banks, Akhil, issue deposit tokens, while crypto platforms push stablecoin rails and RWAs, excuse me. And so how are traditional institutions and crypto native players best collaborating or competing to make cross-border payments and tokenized assets truly scalable for everyday use for institutions and individuals? So, sure. Akhil, why don't you start?
Yeah, sure, happy to. I think this is a hot question I get asked. Is that a competition between banks and payment companies, or is that a collaboration? So I've bastardized the word, please excuse my language, but I call it co-petition. So it's the competition and cooperation, because at the end of the day, it's the partnership that helps the ecosystem grow. We as a bank, yes, Richard mentioned about the deposit tokens, but the way we look at it, we look at 5 stripes, right? So you've got cryptocurrency, you've got CBDCs, you've got stable coins, tokenized deposits, and tokenized assets. We as a bank are focusing very much around 2 stripes. One is the tokenized deposits and tokenized assets. And that's where we as a bank decided from the strategy perspective where we think there's an opportunity. Now, taking a step back from there is then also leveraging blockchain as a technology to look at money movement aspect. I think that's where the opportunity lies in terms of removing or reducing friction that currently exists in the world of fiat. Even if let's talk about the market cap. We talked about over 300 billion in terms of what stablecoin market cap is. Still represents you look at the digital currency aspect, around 1%, 99%, over 99% is still fiat rails. So sky is the limit in terms of the opportunity. But how do you bring it all together? There are real issues in the world of fiat. There is friction. We still are bound by the cutoff times. Yes, there are real-time payment schemes coming into the picture, but if you look at the 80-odd real-time payment schemes currently present, it represents less than 20% of world's total payment volumes. So still there is opportunity around payment interoperability, real 24/7 payments. Yes, it's there, but it's not there when you start thinking about cross-border aspects. So the opportunity is there for digital currency to come in and help reduce friction. Now, the question that you asked is around what role does the bank can play, and what does the future lie? The big question is that yes, the bank has issued tokenized deposits. There is stable coins. Do they compete? I think the question is, the answer is, is more around, can they work together hand in hand? And I think that's where the opportunity lies. And one classic use case I see is the stable coins issued, you have to have reserves held in fiat. Now, let's think about for a moment holding reserves within the world of blockchain. Then you have two systems talking same language. And that's where I see the opportunity in terms of bringing in the world of blockchain together and getting ready for the future in terms of how we can reduce friction or remove friction. And that's where I feel the opportunity. So it's more around the collaboration there that will drive the future and growth.
Thank you. And I love the fact that Brian's going to go next because we have one of the largest banks in the world and we have an exciting early stage crypto native company. So please, Brian.
Yeah, I'm definitely the David with all these Goliaths, but not looking to make any swings. But I would say in terms of like the competing or the complementary side of it, I'm definitely feeling that it's not a competition, and I think that's because both sides bring something to the table. Looking at traditional banks or financial institutions, they bring a series of things that the crypto market cannot invent overnight. It would be like regulatory structure, customer trust, and also operational diligence. Those are establishments that can't be replaced, and people trust their money at a very large level to JP Morgan, for example. But then on the crypto side, there are things that the banks aren't able to replicate. They would have to go from the ground up and rebuild them. And those are things like instant global reach, which is available on chain. Also with the programmability of the chain, which gets into the future of money. And then also, I would say, is also the 24-hourness. With banks, when it's offline and you have to worry about times and holidays and different jurisdictions, on-chain allows you to have that 24-hour reach. So I'd say like those are complements that are going to be work to grow. And I think, we look at players in the market of like getting a little closer to home here, Hong Kong Monetary Fund Association Authority issuing out the licenses to HSBC and also Standard Chartered's joint venture. That's really signaling that they are choosing to have the people who are issuing the dollars, they're actually issuing the Hong Kong dollars, are now also able to do the on-chain activities as well. So you're really tying it very close. It's not a sandbox, it's actually real-world applications. But then you have players like PayPal, to full disclosure, they're an investor in us, but they brought PYSD onto our chain, and that's another financial institution that's looking to get on-chain in real time. So I would say the underlying aspect of it is the infrastructure, and the infrastructure like a layer one or another chain is not looking to replace the banks, or it's really just want to be the settlement layer, and that's what makes the needle move forward, because right now when you have the banks, have those customers are not looking to say goodbye to them. They want to embrace them and be with them for the future. And being able to do that and service them in new markets and new territories is how they're going to do that with an on-chain transaction. So I'd say definitely complementary, and I think they're necessary for growth on both sides.
Hi. Okay, so I would say that there's going to be both cooperation and competition, and cooperation is needed for mass adoption to take place, right? So if you just look at the competitive elements, you'll see a lot of traditional financial institutions acquiring Web3 firms and native, right, including yourself, and getting those sort of expertise. Because if you think about it, it makes sense. So the likes of stablecoin getting a lot of traction, the banks are looking at that from a competitive element to say, hey, how do I get into the game, right? So the banks are now experimenting with tokenized deposits. And it makes perfect sense to put, from the bank's angle, to put a lot of assets on-chain from two aspects. Firstly, it gives their users and consumers a lot of choice, right? So today, the banks and financial institutions operate a certain number of hours a day, 10 to 4, 9 to 5, whatever the case may be. But if you look at it, there is very high liquidity risk involved, where the assets are not traded at night and over the weekend, right? So what if a war situation breaks out or some other big events happening? You can't take positions. You can't hedge your risks effectively. So if you do allow for all these different asset classes to be put on-chain, you allow the user choices, you allow them to switch across different asset classes on a very effective basis. And also you eliminate a lot of jobs that currently are done in middle and back office, which are just reconciliation, account settlement, clearing settlement, and stuff like that. And all those, if you think about it, can be replaced with the combination of AI and blockchain, right? And it's going to be much more effective. It's immutable. So that's the motivation of financial institutions putting asset class on chain, right? So if you look at the likes of NASDAQ and New York Stock Exchange, they have both announced they are going to put their stocks on chain soon. It's traded in the first instance, if I believe it correctly, 23.5. They have not moved to 24.7 yet, unlike crypto. But that's going to be the trend we're going to see going forward. And that competition is coming this way. But competition is also moving towards from Web3 into the Web2 space, right? For example, ourselves, we have started to trade precious metals in January. And within a short span of 3 months, our trading volume in precious metals have surpassed that of quite a number of traditional commodities exchanged globally. We started trading petrochemicals a couple of weeks back, stocks, tokens, pre-IPOs, etc. So we are creating a financial super app with more than 300 million customers. We want to be a multi-jurisdictional, multi-asset class exchange that serves the needs of all users across different asset class that they can really trade into, right? So that's where the competition is going the other way. But the collaboration part is also taking place, right? So we collaborate with the likes of BlackRock, with Franklin Templeton, on Builder tokens, on Benji tokens, recognizing using them as collateral purposes for trading, etc. So you're going to see a lot of areas for collaboration to bring about mass adoption. But at the same time, you see competitive elements at play as well.
Well, and I can't help but hope that sooner than later, I'm not hosting a panel and asking you gentlemen as my panelists to compare TradFi and crypto, right? We can get rid of those expressions. And I give you credit, Richard, you're the first one on the panel to mention AI. You get the credit for the mention of AI. But Leonard, please.
To be honest, a lot of it's been covered, right? We're competing, we're collaborating. It's a love affair that's driving this technology forward. I can only talk about, maybe give some examples, right, of what we're building. You know, the ambitions of Bitstamp and Robinhood in terms of the US equity markets to bring it on chain, to democratize assets, is well publicized. We don't build and scale without cooperation with global banks, with regulated quality stablecoin issuers, because the workflows we're building is to cover both camps, right? It is to be able to settle our workflows with intermediaries, with users in cash and in stablecoins, right? Interchangeably. So we're building for this future. We have other financial intermediaries helping us manage the underlying assets, the custody of these assets. These players, as Richard mentioned, some of these players are our competitors. But if you're trying to build a new asset class or bring an asset class on chain, we need all the help that we can have, because the aim is 24/7 instant settlement, right? So we need more market participants. We need, that drives liquidity, that drives market efficiency. So this is kind of how we're looking at it. It's convergence of customer sets, of offerings, and that's kind of how we're looking at the space.
Thank you. So I'd like brief comments, if you will, because I want to ask these gentlemen very specific questions. But I'd love your brief comments, if you would like to share about, obviously, there's been a lot of talk today, and we've mentioned the Hong Kong's initiatives very recently, as well as ongoing. But my question relative to Hong Kong, we're sitting in Hong Kong. How's the local regulatory environment accelerating real adoption of digitized assets and instant cross-border flows in APAC? And more broadly, how are Mika in Europe, Genius in US? We heard from the professor earlier today, who had a very direct role in the Genius Pact thing in the US. and efforts in other jurisdictions serving to facilitate or inhibit, in this sense they can, cross-border payments and asset digitization. So if you could, maybe 60 seconds each, and please, Richard.
Sure. So I continue to applaud the Hong Kong governments and Hong Kong policymakers and regulators' effort to support Web3, including coming out of clear legislation on that front. I engage in deep dialogue and discussion with them. So I think it's very heartening to see all this development in the last few years as Hong Kong continues to scale up the curve, right? And all this provide clarity for the industry players. And to us, any form of regulatory clarity is always positive. So if you look at, I mentioned Genius Act just now, right? So with the passing of the Genius Act, it caused a lot of clarity, not only to Web3 players on how we can maneuver, but financial institutions on how they can play within and what are the user rights on that front. So everybody is willing to partake because of that. And hopefully we'll see a lot more with the likes of Clarity Act coming up from the US as well. So every piece of clarity and legislation is a movement in the right direction. So we continue to applaud the Hong Kong governments and policymakers' effort on this front.
And for what it's worth, I checked Polymarket a short time ago, and right now it's about 50-50 that the Clarity Act gets passed in the US in 26. I think it's more than likely, but for what it's worth, that's what Polymarket's saying. Leonard, please, thoughts, Hong Kong regulation?
I don't want to repeat what Richard said, but extend on that. You know, we talk about the Clarity Act. We would love to see this stage of public and private sector development in the major FX centers of the world, the London, Singapore, New York, right? That's really going to bring the big market participants into the market. We're still in a transitional phase, so there is fragmentation, there's regulatory arbitrage opportunities, but this is just phase one. We cannot expect regulators to get it perfect the first round, and we'll see this iteratively because all that we've talked about today and that we're building in the market is focused on dollar markets. That's correct because that's where the scale is, but the next phase is really going to be for non-dollar stablecoins, right? We're seeing it in Hong Kong. And how do we facilitate on-chain FX markets? That's going to be a very interesting unlock for the efficiency and the globalization that this technology is trying to drive.
Sure. So I think I'll just echo Richard's comments first. Absolutely what Hong Kong, the regulators, the step in the right direction. Singapore, similar, MAS putting right efforts. So it's definitely a step in the right direction in terms of building confidence and it drives everyone, right? Consumer confidence and businesses. So it's definitely helping the industry, the ecosystem. But then I want to sit on the other side, and the question I guess asked is like, why can't banks like JP Morgan come in and help the ecosystem and the pretty much the whole world of digital assets? I think where the bank sees this, it is a high-risk sector, but with regulatory frameworks coming in, it gives us a lot more confidence and support and having that clarity from the reg and governance aspect. I think that is going to help us in looking at our compliance teams and how we look at the flows via the digital assets world. It's helping us building confidence from the bank side of it, and I think that's a step in the right direction. So yeah, absolutely a growth opportunity there.
Not to repeat everything, but I would say, I look at it, the measure of what's actually taken place. You have the JPM coin years ago was started in a very private way. Don't want to speak on your behalf, but you then look at what happened after the Genius Act was passed, and now you have a longer list of jurisdictions that already have the legislation passed or are getting ready to launch their own ordinances. And so with that, it's actually the proof shows that, as Richard was saying, is like the companies are welcoming the regulations because it allows you to transact and actually get into speed. I would say looking at the market 2.5 years ago before Genius Act was really underway, you wouldn't have this variety of things already in play. It would be a much smaller market. It wouldn't have the traction today. And I would say that as Japan has the GPYC, like that's actually proof that like as regulation passes, there's a company ready to go and launch. And I think it's going to continue as like whether clarity gets passed in 2026, that delivers more future for the stablecoin market.
So in the interest of time, I'm going to pass on the specific questions. But what I want to do is, for the benefit of all of us, is ask these gentlemen a simple final question. What does the world of cross-border payments and asset digitization look like in just the next 2 to 3 years? And what role is AI playing? So in the remaining time, if you can share quickly some thoughts on what do you see out 2 to 3 years?
Just very quick thoughts, right? So if you look at agentic AI, and you look at the payment space, going forward, I mean, you have seen MasterCard rolling out agentic payment as well on that front. You're going to see a lot of things moving towards that direction, right? And if you think about AI, the native currency is actually built on blockchain and crypto. So the likes of stablecoins will become the native currency for AI. So you're going to expect a lot of those payment ecosystem to be evolved around blockchain and AI and built on that front. And agentic will come into play very big time. That's my view.
Sure. Just two things very quickly. I think there are two angles to it. Maybe I'm a bit boring and I'll keep talking about compliance, but it is an important aspect of it. So fraud, monitoring, all those aspects with the adoption of AI, there's definitely a huge opportunity in terms of how streamlining can be achieved and how can the models be more smarter. So in the world of real-time payments, how do we actually stop the fraud from happening? Like those sort of use cases and the adoption is going to be critical. And the second part, which is probably more exciting, is more around the use of AI for the customer experience. Agentic payments, Richard talked about, but there is further expansion around programmability of payments, like all those things within the blockchain world. There are nodes of AI tools that can be leveraged. I think that's going to be the critical aspect. I'll probably keep it short there.
I don't have my phone with me, so I couldn't get AI to answer this question. So to think off the top of my head, as Richard said, AI, automation, and blockchain are complementary technologies. They will essentially be catalysts to take us into this current and future phase of adoption, or blockchain more specifically is what we're talking about. I would somewhat temper that a little bit in that just like we're talking in the stablecoin space about interoperability, fragmentation, this also applies to AI, right? We need common data standards, we need trust structures, we need interoperability for this to really work. It won't happen today, but we're moving fast towards that, and it's an extremely exciting space to be part of.
And just quickly for agentic, I would say that it is, the components are getting as you were mentioning, the components are being laid, and that allows for the scale to be in real time for payments. Richard mentioned earlier, I think everyone's mentioned what Richard mentioned earlier, but I would say there's a little bit about how the velocity of money has been stalling, and that is what's being removed with agentic payments, is that you can have real-time transfers, and when it says real-time, it's actually confirmed and it's done, it's deterministic rather than the delay or the double check. And I think from the compliance standpoint of things, I think the problem has always been humans. Humans are actually the problem when it comes to money. It's the bad actors. When you're doing your KYC and your KYB, it's the bad actors you're looking for. Those are the people. It's not the agentic that's going to be the problem. So I think removing that complication is actually going to be much easier scale in the future.
Thank you. So I'm going to give the audience back something that a panel rarely does, which is a minute of your time. And say, gentlemen, thank you very, very much. To the organizers for bringing us all together, and to all of you for attending. Thank you for your time, your patience, and your listening. And hopefully we'll see you all again soon. Thank you.
Thank you.
Thank you. Please give a big round of applause to Kevin and our panelists. And please stay with us on stage, and let's take a picture together. Thank you. And when you're ready, let's look towards the middle at our official photographer.